Welcome to the Real Estate Show on KMED. October the 1st is our date of 2016. Pete Belcaster and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about, well, all sorts of real estate-related issues and topics. In 7.5 years, Joe, we've never run out of things to say. And you think you've covered everything in 7.5 years, except today we haven't. We haven't talked about insurances. See?
Probably due time, and everyone who has an interest in this program, lives in a dwelling and has a certain amount of need or interest in protecting your possessions and your place in life, because for many of us, that's the biggest thing in our basket.
All right. So do you know what your insurances are at home? You know how much you pay a month and all that kind of stuff, and what you're covered?
Yep.
Really?
Yeah.
Well,
replacement value, all of that.
I'm impressed by that.
That's why I take really good care of my home, and I don't want to have to put them through that process.
All right, let's bring Steve Yancey in. He's from Ashland Insurance and has joined us today on the Real Estate Show. And Steve, hey, welcome to the house today.
Good morning, Pete.
Yeah.
Good morning, Joe.
This is your penalty for knowing Pete.
Oh, okay.
So become a guest.
So are we crazy when we say, gosh, we don't really talk about insurances a lot, but it's really an important deal, isn't it, when you think about all the different areas that you need to have insurance for to protect, as you say, your investment, right?
Well, of course. And very exciting, too, I might add.
Yeah, go ahead. Right.
Anyway, when it comes to home insurance and the real estate market.
Okay, first of all, before you go into that thing, you're seeing in your world that you come from, how is how is business? How is the market doing? As you see from your perspective, from the insurance side of things. We talk about buying and selling and all of that all the time, and we know how that is, the demand, the supply. Tell me about the insurance part of this thing. Where's that today?
Well, insurance is probably a lot more stable than the real estate market is. And although we do see the fluctuations when real estate is selling, we get a good share of those. Mm-hmm. And
are people that you're seeing, are they local people who are coming in from out of state? Or tell me what the mix of people that you're seeing.
We are getting a lot of folks coming in from California and other states, and a lot of first-time home buyers. And I really enjoy working with those types of folks.
So when they come to see you and they talk about insurance, say someone from out of state, or you have a client, from out of state who's coming here, what types of things should realtors or buyers, and what should we know about the homeowner insurance part of this?
Well, the first thing you have to know is we want to make sure that we insure the house to value. If it's going to be an owner-occupied property, for instance, we want to make sure it's properly covered. And how we do that is we use computer models. Each company that sells insurance has their own computer model. And so we use that to determine, based on square footage, where it is, its condition, its age, to determine the replacement cost. And the replacement cost isn't the market value. Right. It's the cost of construction. Right. Okay. So we're looking at what it would cost to build a specific house from the ground up.
All right.
And that's what we insure it for, because we're not insuring the dirt. And that's the basis for the home part of it, insuring the home. Obviously, you have other coverages involved. It's basically a property and casualty coverage. The property, fairly self-explanatory. You've got your home. You've got your personal property, your belongings, jewelry, guns, and so forth. And then the casualty part is the liability in case something happens on your property.
And that's like if Joe slips on my property, someone wants to sue me, right?
That's right.
Your dog trips me.
That's right. Or worse yet, the dog bites you. Big problem in California, big problem here.
Really?
Dog bites. Oh, yeah.
Really?
It's huge
dog
problem.
Bites.
25%, apparently 25% of all liability claims in California comes from dog bites, approximately.
Wow.
No kidding.
I would
never have thought that. No. Does a homeowner insurance policy, say I'm calling you up and I need to get a policy on buying a house or I'm moving here or whatever. So a normal policy, right, is going to cover all those things you just said, right? It's going to cover the replacement value of the house,
I'll go through the basics. So first of all, the house itself.
The house, okay.
The house itself. Any separate structures. There could be a barn, there could be a man cave, or a detached garage.
An additional dwelling unit?
It could be an additional dwelling unit, a rental unit, a mother-in-law unit.
Okay.
That would be a separate structure. Then you've got your personal property. I call it stuff insurance.
Okay.
Your furnishings, your clothing,
Oh, that's covered in the
absolutely. It's a very
homeowner policy.
It's a very comprehensive policy.
Okay.
Loss of use. People don't think about that, but if, for instance, your house burnt to the ground, guess what? Your lender is going to still send you those mortgage bills, and you're going to have to pay your mortgage whether you have a place to stay or not.
Right.
The insurance is designed so that we can make you whole, so that we can put you in a place while your house is being rebuilt. And as some unfortunate people know, they've had to go through this. It takes a long time. It can take a year or even more to rebuild a house. Yeah. You've got investigations, perhaps, cleanup. Permit process is horrendous.
Really tight and heavy demand on the construction industry now. They're building as many houses as they can right now, so you have to get in that queue of all these subdivisions and all these contracts that are lined up. It's hard to find the contractors to get your job done, and all the subs that have to go into just getting that one house done.
Yeah, we're talking with Steve Yancey today from Ashland Insurance on the Real Estate Show about homeowners insurances and others that we're going to get to in a couple of minutes here. So I'm just curious about the homeowner thing because you say it covers the contents.
Yes, it does.
Am I, as a homeowner, should I have photographs of my things that are valuable or everything or just pictures of rooms? Does that matter or not?
That is a great question, Pete. And it benefits you to do that. And here's why. In the event of a claim, the adjuster is not going to hammer you for receipts and that sort of thing, but they're going to simply ask you, what do you have? Because we can determine a price after the fact, but if you don't know what you have, how can you claim it?
Right.
So I usually recommend taking, especially with digital cameras and
your phone.
and phones.
Your phone.
Yeah, take photos.
Take a picture of your room.
It's so easy nowadays.
Yeah, go into the closet, clothing, especially women's clothing.
Okay.
Just go around taking those photos. Put it off-site naturally in case you have a fire. You don't want to burn up your photos. Put them in the cloud or whatnot. And then in the event you do have a claim, at least you have kind of a guideline on what your personal property might be.
Now, in a claim, because remember a couple of weeks ago when Jim Eistide was here from Balfour Restoration on the Rogue Valley Association of Realtors show, he said they work with insurance companies. So do you do that? So if there's a claim of water damage or you have a problem in your house, whatever, they come to you first and then you set those things up, is right, to fix them?
Generally speaking, if we get especially a large claim, the people are besides themselves, and they need all the hand-holding they can get. And so usually, as an independent agent, which we're the intermediary between the client and the company. So usually we take the claims, we talk to the customer, find out what's going on, and then we assist with that. And sometimes that means restoration companies, because it is mandated by the contract that you mitigate further damage. So if you've got a house that it had a fire and was hosed down by the fire department, we want to make sure it gets cleaned up so the damage doesn't get worse.
We heard about that. Remember, that was exactly what we were told. Those are all things that are there. What does homeowner insurance not cover?
Oh, very good.
Because
very good.
There's got to be. I hear this all the time. It doesn't cover this, doesn't cover that. So what doesn't it cover that maybe I should buy separate insurance for something like for what is it?
Okay, well, there's two major, they call them perils, something that happens: earthquake and flood. Earthquake and flood.
Those are good things. Earthquake and flood.
In the Cascadia zone, we could have both, at a blink.
Okay.
That's right. And those can be added on. Other things that will probably never be covered is wear and tear, for instance.
Right. Wear and tear is not covered.
Wear and tear is not going to be covered.
You have to have suffered a loss to make a claim, right?
Yeah.
Obviously, you have to have suffered a loss to do that. Okay, but what else is not covered, though?
Here's something important, that there's a key term that is sudden and accidental. In order for there to be a loss, it has to be sudden and it has to be accidental. So, for instance, if a toilet is leaking, or a pipe leaking in the wall over a long period of time, and you have dry rot.
That's bad.
That's bad, and it's not covered.
It's not covered.
Because it's not sudden.
It's not sudden.
Right.
It's accidental, but it's not sudden.
Okay.
So things that happen over a period of time generally are not covered.
That leans more towards negligence.
Well, improper upkeep.
Yeah.
Lack of maintenance.
That's a really nice way to say
lack
that.
of maintenance.
Negligence. That's kind of harsh word there, kind of thing.
Just say it legally.
Right. So do most people, in the Rogue Valley here, that you see, I mean, what do generally homeowners get here? Do they get these other things added on, or tell me what kind of policies that you generally see here?
Well, most people don't buy earthquake insurance or flood insurance, for that matter.
Here in the valley.
Here in the valley.
Okay.
they say that we're in an earthquake zone. I don't know.
Yeah. What would earthquake insurance or flood insurance cost? Is it really expensive?
It's not really that expensive. For instance, say a $300,000 home, depending upon the company, would cost probably around $200 a year, added to maybe a $500 or $600 homeowner's policy.
That doesn't seem too bad. What about flood insurance? Because
that's a completely different bailiwick. Completely, it's handled by FEMA, by the federal government.
That's why it's all screwed up. I mean,
there's your problem.
Yeah. Well, and that was kind of harsh.
All right.
And almost all people don't want to buy flood insurance, and it's mandated. Generally, it's mandated by the lender. And in fact, if a federally backed loan is in a flood zone, if the house is in a flood zone, then the lender is mandated to make sure that they have flood insurance, and they won't fund the loan until that's done.
And those floodplains have been recently
redefined.
That's right. About 3 years ago,
into the party.
That's right. There was a big mix-up here in I think it was 13 when the flood maps were changed, and everything was up in the air. And quite frankly, it's still up in the air. The thing about flood insurance, it's always changing. The rules are always changing, and there's really a lot involved.
Yeah, they're really,
For instance, one of the new rules is if you have a home that's more recently built, then you must get an elevation certificate. In order to get an elevation certificate, you have to go to a certified land surveyor, and they generally charge between $400 and $600 for that. Before we can even give you a quote,
adding more costs to the to the whole thing out of the thing is a homeowner's insurance price. Oh, I'm sorry. One other thing. What about mold? That's not covered either, correct? In a regular policy, correct?
Usually not. Usually not. And I also want to add a little disclaimer. If anybody listening to the show has a problem, you need to talk to your agent and or look at your policy. The information I'm giving you is general information.
Right.
Understood.
Each company is a little different, so I don't want to get into too much specifics.
But generally, mold
for liability purposes.
But generally, mold is not covered, the way I understand that, because it is not sudden, right? I mean,
generally,
it's over a period of time, like the leak in the wall. You gotta know these things. You gotta watch for this stuff, and you gotta mitigate it because you can't take the bleach and just cover it up because you're going to get caught. I mean, it just doesn't work that way.
Hey, Steve, quick question. Do you have this conversation ever? And I'm just thinking, I've hosted a couple of emergency management preparation shows and been to a couple forums locally. The Cascadia Earthquake Subduction Zone has been in the New Yorker.
I'll talk about it.
And it's all very good information to be out there because this is going to happen someday. So I'm a homeowner here in Medford. It's like, okay. About every 350 years, we might be a little overdue, but an earthquake of that magnitude is going to devastate so much of the region. It's such a. Do you have that conversation with clients at all, or do they?
We do.
I bet you 800 miles further south, you're having that conversation all the time.
Well, I was an agent in California for 10 years, and believe me, that was a game changer because back in the day, it was mandated. That insurance company has to offer the insurance. And I think it's changed now. And so the risk became so high after the Loma Prieta earthquake and the earthquakes down south. Northridge.
Policies would be
high. There was a moratorium. We couldn't sell homeowners insurance because we were mandated to sell earthquake. And the companies couldn't afford the risk.
Put your risk out there,
So they stopped. A lot of companies stopped.
Okay, so you told us about like a flood and earthquake, mold. In our area here, what about fire? We have so many people that live in these forest zones. I mean, they're everywhere out there.
And the urban-rural interface.
Berkeley fire or something, the urban-rural interface.
Oak Knoll fire.
Are fires covered with that, or
absolutely.
Should that be special?
It's another term is fire insurance. And let me go over some of the things that really inhibit real estate transactions. So fire is one of them.
Firewood.
Well, fire, yes. And
if my property is not properly fireproof, would that change it?
Well, what they look for is a couple things. First of all is location. It's called the protection class. And the further away from fire protection you are, the higher the number. The higher the number, the higher the rate. It goes to 10. After 10, nobody's going to respond, and that's tough to get insured.
So the further away you are from a station, right? Kind of a thing like that out in the rural land. Okay,
correct.
All right.
Sam's Valley, perfect example.
Okay,
very difficult. Another thing is brush hazard. That's a big one right now. Brush hazard. Oh yeah.
This time
and
of year,
slope.
yeah.
And
Yeah.
slope.
And slope.
What the insurance companies are looking at is if you are surrounded by trees, especially when you're on top of the hill and there's trees below, the fire running up the hill. Yep. So they look at that, and most companies want to see 50 to 100 feet clearance around the whole house if you're in one of those areas.
What are the? Hang on.
You got to hold up there because
I want to know what are the high risk zones for fire in our area, because a lot of people would want to know that moving here or even considering moving in our area.
We're talking about insurance today with Steve Yancey from Ashland Insurance. We got to talk for hours about this stuff. It's so interesting. We're on the Real Estate Show. Don't forget, check out all of our past shows at realestateshoworegon.com or on YouTube/Real Estate Show Oregon. We're coming right back to KMED talking about insurances right after this. The Real Estate Show continues here on KMED. October the 1st is our date. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Thanks for joining us here on October the 1st. My goodness. It's 2016 is just rolled along. Right? What a year this has been. I can't wait to see the statistics at the end of this year because, we really haven't had as much of a slowdown. It's slowed a little bit here and there, but overall, Joe, the market, the demand continues. The listings, gosh, I had people this week. I've been really busy this week, with people looking for properties. And again, from all over, it's everything. It's across the board, even though this is supposed to be the slow time of the year. This is a good time to actually sell, because the fall, people are very serious about it if you're out right now. You're not just...
We're probably all in the game rooting for a mild winter with good building conditions, so we can get some more new homes coming rolling in, and they are. Another one of the new Summerfield subdivisions is coming through the process now, and 100+ new homes. So,
and what's the price of those going to be? Those are the 3, 4, 500,000 range.
Yes, they are. Yeah, they are. But that's the wave of the future.
I know. It helps some. It doesn't help some. It doesn't help a lot of people, but it does help some. Anyway, today on the Real Estate Show, we've been talking about insurances, homeowners insurance, and other insurances that you may or may not need for your properties or your possessions. We're with Steve Yancey from Ashland Insurance, who's with us in the house today. And by the way, Ashland Insurance, I know there's a couple of offices. I see one in Ashland, I know, and
sure.
Here in Medford, at right down from KMED. I didn't realize it was started by Ellis Wilson, right?
Absolutely.
A friend of mine, Ashland. He'd been retired for years. I didn't know that. I knew he was an insurance guy.
Well, and then he sold it to his sons.
His sons, yeah.
That's Wilson Brothers.
Yeah, that's kind of a cool thing. Anyway, before that last break, Steve, you were telling us about how deals, real estate transactions, can go sideways because of insurance issues. So
absolutely, all the time.
So what? Give us some of those examples of what those might be.
Deal killers.
Deal killers.
Flood insurance is probably one of the main deal killers. And I do have advice for realtors. If you are listing a house, do yourself a favor and get an elevation certificate. Pay the money. That way, if somebody wants to buy your house, at least without spending a bunch of money, they can find out what the insurance is going to cost. Because I can't even quote the house unless I have that elevation certificate.
But if I did an elevation certificate, what I would do it, not everybody has to do it. Would it just be people who live by rivers or streams, or I don't know where that would be, creeks?
Good question.
All of the above.
The people who need flood insurance generally know.
Oh, okay.
Generally, no. And then a lot of times you'll find folks that have been in the house for years and years and own it outright. They're not mandated to get the flood insurance. But somebody new buying the house, they will. Otherwise, they won't get the loan. Because the lenders are the ones requiring the flood insurance on the property. That's right. And the federal government is mandating that the lender make sure that the buyer purchases it as well. And one more thing about the fire part of this thing, when you live in the rural interfaces and stuff. So really, people who, and I've seen rural properties, we all have, where people have not taken any precautions for fire, right? They're there. Other people have really done great jobs in protecting their homes. Can they both get fire insurance on something like that? Not always. Not every property is going to be insurable. If you have a property that's way out there and there's no water, insurance companies aren't going to want to insure that for fire. All right.
If you're thinking of a rural property, and it's a real consideration if you're going to live in the forest interface with fire, just go to YouTube and just type in fire defenses, rural properties.
Okay.
Some of the Forest Service, some of the videos that have been put together by the fire scientists at OSU are absolutely eye-opening, educating in the way that embers, all kinds of things can play in the mix, and how there is a defensible plan. You can defend your property.
Absolutely.
And if I were insurance,
most insurance
I
companies
wouldn't touch it unless you took those steps to give yourself that fighting chance.
Most insurance companies want at least 50 to 100 feet clearance around the house from any brush and trees. Yeah. Now, that's not in the city, but that's rural, because obviously in the town we've got trees, landscape trees and such. We're talking about brush, forest, those kind of things.
Overall, our homeowner insurance policies in Oregon, here, Jackson, Josephine counties, are they comparable, or would you say in terms of rates compared to other areas, other states? Are we low? Are we high? Are we in the middle? Or tell me where that is.
Well, the rates, I think, are fairly stable across the country. What changes is the values. For instance, in California, how much does it cost to build a 1,200 square foot rancher?
To replace a house.
To replace it, to rebuild it.
Okay,
that's going to be a lot more than it is here. So it really has to do with the building costs, almost more than anything.
That's
not so much those dramatic variances in the land values.
Well, yes, and the fire risk. And the fire risk.
But the land values are pretty much a moot point.
Pretty much, we're not insuring dirt.
Because that 1,200 square foot house is going to be worth $2 million in San Francisco and a couple $100,000 here.
Right.
Correct.
We have lots of our listeners are investors and own rental properties. What type of insurance do I need on rentals and in those types of properties? How does that differ from the homeowner policy?
It's a different game,
It's a different type of policy. It's called a dwelling fire policy.
Dwelling
fire, yes. Okay. Or landlord protector. There's a lot of different names.
Okay.
DP3. But when it comes down, it's really just like a homeowner's policy, but it's stripped down. You still have the home itself.
The home itself.
And the same rules apply. You want to make sure that we insure it to value.
Okay.
A lot of companies, most companies offer what's called replacement costs. I should talk about that. This goes for both homeowners and dwelling fire policies. Okay. They will pay. Replacement cost means new for old, so no depreciation. And on top of that, most insurance companies offer a little extra, 25% above and beyond, 50%, sometimes more. And the reason being is in the event of a loss, we don't know exactly how much it's going to cost. So they want to make the worst thing for an insurance company or an agency is to have a loss that's not covered. Nobody wins there.
Right.
So we want to make sure that you have enough coverage.
Okay.
And so replacement costs. You definitely want to make sure you have replacement costs on the property itself. So if I've had a policy for like 20 years, has it kept up with my replacement costs, or do I need to talk to somebody again about maybe I'm behind with it? I mean, I've had my policy 25 years now in my house. I don't know if I've ever changed it, to be honest with you. Is it going to cover that, or do I need to come back and look at it again? Well, most of the time, yes. They have what's called inflation guard. So over the years, you'll see the amount of coverage that you have go up a couple percent every year. Therefore, the rates go up a little bit too. So most of the time, the insurance companies stay on top of that because they want to make sure that you have proper coverage too.
Right. What if a tree falls on my house? Is that covered by
question,
or my neighbor's
Boy,
house?
that happens in Oregon.
You think? I mean, is it covered by my homeowner policy?
It depends.
It depends. It depends. I don't like those depends things. Okay.
Sound like an insurance agent,
or an attorney. I'm not sure.
Anyway, it really depends on why it falls. So, for instance, if you have a tree and it falls on your house, you're definitely going to be covered.
Okay. All right.
Regardless of why it falls.
Oh, okay. All right.
Now, what if your tree falls on the neighbor's house?
Yeah.
Are we going to rebuild your neighbor's house? Well, the answer is it depends. Now, Pete, if you're out there with your chainsaw on a Sunday afternoon, sipping on your margarita, and you accidentally drop a tree on your neighbor's house, that's going to be covered. That's negligence.
Okay.
That's negligence, and that will be covered. However,
it will be covered.
It will be covered under your liability or casualty portion of your policy.
All right.
Because guess what? You're going to get sued.
Yeah.
People don't tend to like that much.
Yeah,
rightfully so.
What about other ramifications of making a claim? I mean, should I make a claim or deductibility out of this thing? What happens if I make a claim, or what should I? Tell me that.
Well, let's go back to the trees quickly, if we could.
Okay.
So So usually what happens with a tree is the wind blows it over. Yeah. And if the tree is sound, then, and it falls on your neighbor's house, the insurance company's not going to pay. And I had a client once that was very upset about this because he loved her neighbor and she wanted to make sure that they were made whole. But the problem is it's not covered. And this is how I explained it to her. I said, well, the wind blew it over. And she says, well, it's my tree. And what I said to her, I said, well, what if a tornado came through here, lifted up your car, and it landed on your neighbor's house? Would you feel responsible for that? And she says, well, no. And I said, it's the same kind of thing. It's the same kind of thing. It has to do with negligence. If it's an act of God, nature, that sort of thing, wind blows it down, then that's on their homeowner's insurance.
Right. It's on their homeowner's insurance would cover that and not yours.
That's right.
See, yeah, I mean, look at all these things that we think about, but we never don't know the answers to like that.
Scary answers to know, though. Sometimes we avoid those.
No kidding. But we want you to be a smart real estate consumer, and today we're learning a whole lot about insurances.
We're dragging you along with us.
Yeah, we are. We're with Steve Yancey from Ashland Insurance on the Real Estate Show. One more segment to go today. We still got lots more to talk about. There's a whole lot of other insurances that are out there that you got to think about as well. We're coming right back after this. Real Estate Show rolls on KMED. August the 1st is our date. So glad you joined us. Pete Belcastro with you here. We continue our show about insurances. And man, I think of all the things we've already learned today about homeowners insurance, about trees falling on your houses, and on it goes. And we're still not done, because there's still more to cover. We're with Steve Yancey from Ashland Insurance here on the Real Estate Show today. Don't forget, next week we'll have a John L. Scott Market Watch show here. We'll update you on the latest SOMLS stats, and we'll take a look at what September did in the real estate market. And I can't wait to see those. I'm sure you are too. Anyway, we're talking with Steve today in insurances. And okay, we've covered a lot of area, but there's still some out there that we haven't gotten to. Tell me about insurances for manufactured homes, because that's a lot. I mean, I see there's a lot of transactions going on. What types of insurances is required there or needed there?
Well, we've seen a lot of transactions with manufactured homes.
Yeah.
And it's not a lot different than a stick-built home, but unfortunately, it almost always costs more.
It costs
more, actually, per thousand.
Okay.
Yeah, there's. I think partially is because of the market. Not too many companies do that anymore.
Oh, okay.
Yeah, I've only got like 2 choices for manufactured homes, whereas for a regular stick-built house, I've probably got 10 choices.
And I would think that in manufactured homes, it may depend on where you're at. If you're in a hurricane-prone area or earthquake areas, straps, and that's going to probably do it. Our area isn't quite that way. So our rates here are higher also than you're saying than regular homeowners mostly.
Well, it's higher
per
thousand for the amount of coverage.
Okay, yeah.
For the amount of coverage, yes.
Okay, and you got to have them, right?
If you want a loan, you do.
Well, see, but if you don't need a loan, then you don't have to have them.
You don't.
You don't really have to have that. What about a lot of people I know have bought second homes and some third homes? Maybe you have a cabin somewhere, at a lake or on somewhere, or just a second home in another somewhere else. How are those figured in for insurances for the homeowner, people who own those?
It's pretty straightforward. Again, that's the dwelling fire policy, and we have customers that have dozens of those. And if somebody has a lot of properties, we can put them on a commercial policy and schedule them. So we can put multiple units on one policy. Okay,
I was going to ask you about commercial insurances, commercial buildings, businesses. Is that out there? What's out there for that? I have no idea.
Oh yeah, there's coverage for almost everything. And commercial buildings, it's not much different than homeowners insurance. Obviously, it's commercial in nature, but still, you have to determine what the replacement cost of the building is, the age of the building, what's it made of? Does it have a shake roof? If it does, that could be problematic. That sort of thing. It's not that much different.
Tell me about new construction. We're seeing a lot of new homes built.
Sure.
Is insurances, are they being covered differently in anything because of, fancier, what do you call them? Just electronic things in homes, the new things that are going in homes. Is it forcing prices up on terms of coverage of that stuff or not?
Actually not. In fact, it's the exact opposite, because insurance companies love new homes. We have some companies that on year one, on for instance, a 2016 home, can be discounted 30%.
Really?
Yeah. And as it gets older, usually the discount diminishes. But new houses generally don't burn as much as older homes.
And is fire the number? You said the number one claim that you saw was
the number one claim.
Okay, all right.
That was, we're talking about the liability with
flood insurance was the number one claim and that kind of thing. Liability.
Well, the number one claim is actually pretty straightforward, is water damage.
Water damage
due to plumbing or appliances. Now, that's not flood insurance, but for instance, we had one not too long ago where one of our insureds tried to put a refrigerator in a hole in a space that was a little too small. It kinked the little water hose in the back, pipe leaks, floods the floors. Damage that way.
And yes, that's not covered, right?
No, that's covered. Oh, absolutely. Up to the limits of the policy.
It is covered.
Because that's not considered flood. It came from plumbing or appliance. Another thing that happens quite often is the hoses to your washing machine. Those are always under pressure. And a lot of times if those hoses get weak, it seems like they break when people are out of town. Mm-hmm. And so you come home, water's pouring out from underneath your garage. Mm-hmm. That's not a good thing.
Water damage, number one claim. Well, you're exactly right, because it's exactly what Jim Eistad said to us a few weeks ago. Water damage all the time.
Happens all the time. All the time. Fire is more rare.
Okay.
But obviously when we have a fire,
it's just more catastrophic.
Much more catastrophic.
Right. Yeah.
Usually, yeah.
That's probably what there is. What do you think people need to get more of? Is there some part of insurance that you think people need? Would you recommend that they should have or get more of? Make sure your policy is correct on anything?
Well, I think the number one thing is to make sure you have proper coverage and trust the person you're working with.
Okay.
Set up an appointment to talk about and review the coverage. Just make sure you have enough coverage. That's the main thing. Is you have enough coverage, and it doesn't hurt to check prices every now and then. Mm-hmm. If you've had your insurance for 30 years, there's a fair chance that the price may be high.
Mm-hmm. Yeah, that's really it's all part of the process of buying and selling and getting yourself set. And insurances are obviously a major role in it. The biggest thing we don't want to do, as you say, is to see people lose the real estate deal because of insurance.
Exactly.
Yeah.
Exactly.
Yeah.
And some of the other pitfalls that we find are, shake roofs, for instance.
Shake roofs are pretty much out, aren't they? I mean, you see a shake roof.
You'd be surprised. I saw a 5-year-old shake roof on a house not too long ago, and it really surprised me. But they're out there.
I think, and I don't know if this is true or not, but it seems to me that if you have a shake roof on your house and you want to sell it, the buyer is going to either want that replaced or is going to want money to replace it after the sale or the close. Isn't that, don't you see that?
Oh yeah. Well, you don't see that many shake roofs to begin with,
right?
But yes, that can be a problem. And worn roofs, that's one of the number one things that my underwriters look at, is the roof in good condition, because if you have a worn roof and it rains, guess what? The water's going to come inside the house.
Mm-hmm. Do you physically inspect homes does that still happen before you insure them? Do you go out and look at some places at all?
Some of the older homes, I drive out there and I take a look at them, but most homes that I look at are through the internet. I mean, the internet's amazing. I go to Google Earth, what have you, and you can see quite a bit. And on newer homes, generally, it's not an issue. Mm-hmm. It's really the older homes that we look at. Another thing when it comes to older homes is the electrical panel. Does it have circuit breakers?
Yeah.
Does it have sufficient amperage capabilities? Mm-hmm. They look at that. They look at plumbing, heating. I have a deal that I'm working on right now where there's, believe it or not, no heating. They have a wood burning stove. And the insurance companies don't want to touch that. And the reason being is these people are a little bit higher elevation where it snows. And if you leave the house and you don't maintain that heat, the pipes are going to freeze.
Yeah, see, that's amazing. And there's so many stories out there. We're out of time. Steve Yancey from Ashland Insurance. You can Google them or look them up at Ashland Insurance, and Steve will be happy to answer any of your questions. We learned so much from you today. Will you come back and do it again?
Well, I think so.
All right.
Thanks, Pete.
Thanks, Steve, so much. Insurances, boy, you'd not a lot to know. That'll do it for the Real Estate Show. Have a great week, everybody. God bless, and we'll talk to you next Saturday, right back here on KMED.
You've been listening to the Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only real estate show on KMED. And thank you for making the Real Estate Show part of your weekend.